And I certainly agree. Solar panels, for example, are 20% of consumption of silver every year. And as the price goes up, they get more expensive. But there are all sorts of reasons why uptake of solar panels, I'm not saying at, $200 or $300 silver, but even at perhaps $80 or $100 silver still looks pretty attractive. But, in India, I can't remember the specifics exactly, but there was a report that they were going to no longer rely on pricing from the West. They were going to be relying on pricing at home. What Hong Kong, Singapore, India is doing the same thing now. And who can blame them? I think it's a very healthy thing, frankly, for the market in general.
Silver's dramatic rise and subsequent correction have left investors debating whether the metal has entered a new bear market or is simply consolidating within a larger bullish trend. Silver analyst Peter Krauth argues that the latter is more likely. In his view, the metal's ability to remain firmly above $50, a major historical resistance level, suggests that the long-term bull market remains intact. Krauth says technical analysis is useful partly because so many investors follow it. Around mid-July, silver was trading below $56, a level that had previously acted as resistance in October and November. He believed that once silver returned to that area, the former resistance could become support. Based on that interpretation, Krauth said he was willing to buy both physical silver and silver-related stocks. His decision was also influenced by market sentiment. After decades of observing precious metals, Krauth said experienced investors can develop a sense of when an asset begins to look excessively cheap relative to its longer-term potential. In his view, sentiment can eventually become so negative that selling pressure is largely exhausted, leaving fewer investors willing to sell and creating an opportunity for buyers to step back into the market. He believes that dynamic helped create the opportunity he identified in silver. Krauth's larger argument centers on silver's dramatic price cycle. He noted that it took roughly 45 years for silver to return to the $50 level after its previous major peak. Yet, once that level was reached, silver moved from around $50 to $100 in only a few months. Krauth described that unusually rapid acceleration as a potential sign of a market approaching a mania phase, while also emphasizing the importance of subsequent corrections in a broader bull market. If you found this analysis helpful, please like, subscribe, and share. Only 3.2% of our viewers are subscribed while 96.8% haven't subscribed yet. Help us reach our goal of 1,000 subscribers. Your support helps us bring you more in-depth market analysis. Thank you for watching.
Well, I think we've had a foretaste of it back in December and January when things went a bit crazy. And, I like to say it took 45 years for silver to go back to $50 from 1980 to 2025. And then it took 3 months to double to 100. So that's almost a definition of a mania. What I find interesting, though, is that I had put out a chart that I came across, and it was a general chart for what a bull market looks like. And also a couple of months back that in India, I can't remember the specifics exactly, but there was a report that they were going to no longer rely on pricing from the West. They were going to be relying on pricing at home. How the price at which gold and silver is being settled at home was, and I think perfectly rightly so, was being considered more proper, more realistic, and the right way to do business. And so, as you say, Hong Kong, Singapore, India is doing the same thing now. And who can blame them? I think it's a very healthy thing, frankly, for the market in general. Should have been that way, decades or longer ago. But at the very least, we're finally moving there, and it's definitely a good thing.
However, Krauth believes the subsequent collapse from approximately $121 was not evidence that the bull market had ended. Instead, he compares it with a typical bull market pattern in which an early rally is followed by a sharp correction that removes weaker investors before another major advance. He considers the January decline a potential bear trap, arguing that investors who bought at $80, $90, or $100, and expected prices to rise continuously may have been forced out during the correction. For Krauth, the most important evidence is that silver has continued to hold above $50. He views that level as particularly significant because it had represented a major peak for decades. The fact that silver has remained above it for roughly 10 months, despite substantial volatility, is interpreted by Krauth as evidence that the market has established a stronger foundation. Industrial demand is another part of his argument. Krauth acknowledges that higher silver prices could encourage manufacturers to seek substitutes, particularly in solar technology. However, he argues that solar power remains economically attractive because panels can produce electricity for many years. He also questions whether copper can fully replace silver, citing differences in durability and efficiency. Let's get back to the video.
Of it is, I'm going to say, I'm not a big technical analyst, but I do think it has important value. There are lots of people who follow technicals, and if nothing more for that reason, it has some impact because many people do pay attention to them. So about a month ago, mid-July, silver was under $56. And if you look back about a year, silver found that to be a bit of a, I guess, a ceiling, overhead resistance. And I'm going to say this was sort of early to mid-October, and then again, second time in early November. So I felt that if it was testing those levels where it had previously been sort of overhead resistance, that it could serve as what we call support. So I was willing to, put my money where my mouth was and do some buying, both of some physical and some stocks, and put some cash to action. And so, at least so far, it's been good. I will say that some stocks have pulled back, sort of tested a second low since that point. Most have not hit those previous lows. So far it's looking quite good. So yeah, I mean, those, so that's sort of the, I guess, the technical side of it. And then the other part of it is, just being in these markets for several decades. And after a while, you get a sense of when things just feel sort of too cheap, sentiment essentially at some point hits a low. And when there's no one left to sell, well, then the buyers come in. And I'm glad to have been one of those. People were looking for all sorts of reasons why, silver should correct and crash and never run again. One of them was, okay, and I certainly agree. Solar panels, for example, are 20% of consumption of silver every year. And as the price goes up, they get more expensive. But there are all sorts of reasons why uptake of solar panels, I'm not saying, $200 or $300 silver, but even at perhaps $80 or $100 silver still looks pretty attractive. One great example that I have is some research by a company called Ember. And what they did was they compared a couple of sources of energy, natural gas versus solar panels, for example. And they said, if you have $100 million and you want to generate 1.5 terawatts for 1 year, let's look at these two options. You could spend that $100 million and get 1.5 terawatts of electricity from natural gas for 1 year. You could spend that same $100 million, get 1.5 terawatts of electricity from solar panels, but you're getting that for 25 years. So because the solar panels will last and still generate that same amount of output each and every year. So I mean, and then you've got the argument of, because people or manufacturers are looking for substitutes for silver because the silver price has gone up and there's this concern about them switching over to something like copper. Well, I've heard and read anecdotally that some of that may be happening, but there are a lot of arguments against copper. For example, it does not last as long, it corrodes, it's nowhere near as efficient as the silver solar panel. So you may be paying less for those panels, you're going to be replacing them sooner, you won't get the same output. And,
For Krauth, Silver's ability to hold firmly above $50 for nearly a year is one of the clearest signs that the January correction may have been a temporary setback rather than the end of the broader bull market. He argues that the dramatic decline following silver's surge toward $121 should be viewed in the context of a larger market cycle, potentially removing weaker investors before the next phase of the advance. While Krauth does not present the future move as guaranteed, his interpretation is that silver has demonstrated enough underlying strength to suggest that the real bull market move may still lie ahead. If silver continues to hold firmly above the $50 level, could the recent correction ultimately prove to be a temporary bear trap rather than the start of a new bear market? Stay with us for more market analysis and financial insights. If you enjoyed this video, please like, subscribe, and turn on notifications. Only 3.2% of our viewers are subscribed, while 96.8% haven't subscribed yet. Help us reach 1,000 subscribers. Thanks for your support, and see you next time.